Well, the markets may have taken a hit today, but the Chartmaster says you might be able to find safety in one precious metal. Carter Worth of Cornerstone Macro is here to chart it out. Hey, Carter, what are you looking at?
You bet. Let's take a look. Three simple charts. We're going to first look at the relationship between real interest rates and gold. And you see that there. This is, again, gold juxtaposed against real rates inverted. And the correlation runs at about 90%. We know that real rates are making new lows this week at -1.2%, almost, a little bit less. And so the question is, does gold have a bit of a tailwind? Two charts on gold. The first is just a 3-year chart. And what we know, of course, is we got that 20% drawdown. We had that peak back about a year ago. It was in August. We were at 2110. We draw down 20% to 1920. We bounce, and we've been sort of chopping around. But now look at the third and final chart. It's the same thing, but I've annotated. I've put lines in. And this is the issue. We're working into an apex, a standoff, if you will. Is gold going to break out as I've drawn the arrow, or is it going to do something else? Our hunch here is that the way the miners are holding in and the way gold is positioned here and what real rates are doing, not to mention 10-year yields outright, that gold is a good play.
Carter, we mentioned this in the terms of gold being a safe haven, and I'm just curious, how does Bitcoin look these days?
Well, so Bitcoin is hardly a safe haven in terms of its volatility. We know it takes its dive, an epic one, right? We're talking 55, almost 60%. Grinds sideways for 3 months and has a huge pop just in the past 8-10 sessions, and now chopping around. It really, it's not in any particular position. I would say you don't bet it long, you don't bet it short, right here and now.
All right, Carter, we'll see you soon on Options Action. Carter Braxton Worth of Cornerstone Macro. Nadine, how are you feeling about gold these days?
Well, we've been adding to our positions in the last couple of weeks, and I look at something for like the GLD, which is the gold ETF. Our low end of the risk range there is about 167.50. It's got a 47% implied volatility premium. What does that mean? People are paying up for protection, so people are worried. We like it. In addition to rates, as Carter mentioned, it's also negatively correlated with the US dollar. And anybody can take a look at the chart. The dollar's been going down for a bit of time here, which means that gold should go up. So we're bullish on gold, and although one of our favorite names, which is Franco-Nevada, it's, you know, we're out there letting people know that we own it. I'd get it more at the 146 level. But right now, you could get into the GLD. I think it has better asymmetry for your viewers.
Yeah, so it's really interesting. Carter's charts point to a move back towards that high last summer. What happened last summer when it topped out? That's when Bitcoin started going back up. And I'll leave that to BK right here. If I'm inclined to buy gold for an inflationary hedge, I'm probably more inclined at this point to buy Bitcoin. I mean, it just doesn't, I don't, you know, all these people, Guy Adami's not here right now. He started trading the gold, what, in the 70s or early 80s?
60s.
He was actually the original miner.
Yeah, but it just doesn't, you know, to me, it doesn't make any sense. If that's the asset that you want to own, low single digits in your portfolio to be an inflation hedge, well, I'd probably rather do Bitcoin.
And if you are going to buy gold, then you buy the miners, because the miners outperform or underperform by 3 to 1 on leverage, because they're the master of their own destiny. So if you think gold is turning up, buy the miners, you get a little more beta.
Brian Kelly, you got to go to you for your Bitcoin commentary. But I mean, in your portfolio, is there a place for both gold and Bitcoin?
There absolutely is. I mean, I'm long gold and silver at this point in time. I don't think there's anything wrong with it. I do think it's the same play, and I would agree it's a similar play. I shouldn't say it's the same play. It's a similar play, but the tailwinds are the same. So, and just a clarification, Dan was saying Guy traded gold in the 70s. I think he meant the 1870s, just so we know when that was. But point being, 1870s or today, I think it's the same trade here in that you're going to hedge inflation. Bitcoin's a better hedge for that. Plus, you got this upside tech kicker, right? That this could displace gold. Bitcoin's market cap's about $600–700 billion right now. Gold is $10 trillion. There's just this big upside call option in Bitcoin relative to gold. But that doesn't mean you can't buy gold. I like both gold. Silver is, again, something that looks like it really wants to run higher. So gold, silver, Bitcoin, go for it.
Shepard Smith here. Thanks for watching CNBC on YouTube.